Thank you guys for being here, everybody that joined us. And today I have a very interesting team here and a very interesting story that I think out of the hundreds of sessions we've done and probably thousands of companies I've met through the years at our different destinations, I haven't seen something as unique as this. So that's going to be an interesting discussion today. So today I have with me Norton, Katie Arnold, Jonathan Bateman, and Rebecca Rabe. And so, by the way, where are you guys physically?
I'm based in Chicago, Illinois.
I'm also in Chicago, Danny.
I'm based in Boston, Massachusetts.
And I'm in the West Coast in California.
Oh, wow. So what is it? 8 in the morning. So good morning, Rebecca.
Good morning.
So Chicago, as you may know, we've done our first conference this year in Chicago with Sam Zell and Carol Levin-Bernick and the Ricketts and Pritzker and Crown.
Mm-hmm.
So it was fun. So a couple of words. The story is very interesting because it's we will get to the story in a second of actually a couple that comes from different worlds of investments and PR and all of that, and how they took advantage of that. So just a couple of words. Of course, we'll dive into details in a second. SPRIG Equity is a growth late stage health tech fund that is set apart from its peers due to the deal flow they're getting, and that will be explained in a second. It includes the access they have to Abbott Laboratories confidential portfolios, and exclusive access to the clients of SPRIG Consulting. And here comes the story that we'll get into in a second. A leading strategy and commercialization consulting firm that works with the most innovative private healthcare companies in the industry. So you have an unfair advantage even here. And so the founders, Katie and Evan, both of whom are professors at Kellogg and seasoned healthcare professionals with operating, consulting, and investing experience, are a husband and wife team that combines two successful careers to form SPRIG Equity. Yeah, that's amazing. Actually, I'm working with my wife as well, but we try to keep it several stories apart. Yeah, so that's impressive by itself. The combination of the team and the proprietary deal flow has enabled SPRIG Equity to effectively build and map investment pipeline that's very impressive. They already have targeted investments through 2024, where they have access as well as signed term sheets for first investments, which is anticipated to close shortly. I will let you tell the story. So I'll jump just to quickly share a couple of words about you guys. Evan Norton, been a healthcare investor and operator for over 20 years, holding roles as the leader of Abbott Laboratories corporate venture group for a decade. Wow. General partner at Excelmed Partners and principal at Onset Ventures. He has guided 15 of his prior investments to either be acquired or become public companies. That's all I have to add. It's remarkable, really. I'm interviewing many people, and this is exceptional. Katie Arnold, operating partner, SPRIG Equity Fund. So she's the CEO and founder of SPRIG Consulting, another firm that has worked with over 250 health tech companies with more than 40 clients be acquired or gone public for a total value of over $30 billion. SPRIG Consulting clients are frequently included in the Fierce 15 list, which recognizes the 15 most promising private medtech companies in the industry each year. So basically, I guess part of our story is what happens if those two worlds would have married for real. Now, Jonathan, 10 years of healthcare consulting, investing and operating experience, started his career at the Boston Consulting Group before moving to Riverside Partners, where he focused on healthcare and technology, middle market, private equity. So he was also a Zell Fellow while at Kellogg, worked with even at Abbott Ventures and multiple early stage device and digital health startups. I would jump over the second paragraph. I hope there's nothing important there. Rebecca, investment partner on the West Coast. That's why she looks happier than all of us, because she's on the West Coast. You know, everybody are happier on the West Coast. Brings over 15 years of medical device operating, consulting, and investment experience to SPRIG Equity. As an operator, she held various strategy and marketing roles in both public companies, surprise, surprise, Abbott Laboratories, and private medical device companies. On Thera, that was acquired by MERS, and Kane Medical, that was acquired by Zimmer. I hope I pronounced those names right. She worked for the last 7 years at SPRIG Consulting, providing strategy expertise and to private and public healthcare companies. So, wow, what an interesting company, and so nice to have you here. So good morning, Chicago, Boston, and LA. Is it LA, you said?
Orange County, close enough, LA.
I will use this to do another small piece of self-marketing. So just so you know, we are putting together the first LA conference, and we are so excited because we got the Firestone family on board. We got the Nazarian family on board. We got Silverstein family that just bought the bank tower in LA, and that's their first entry to the West Coast, and many other surprises. Crown family from Chicago will be there as well. So just so you know, in May, we're coming, and we should probably meet. So now you can finally get to the point, and let's start understanding what's going on, what you have to offer.
Okay, sounds great. Rebecca, would you mind pulling up the presentation, please? All right, so Denny, thank you so much for the very kind introduction, and also for hosting us today. I also want to thank everyone who's taking the time to participate on this session, or those of you that are choosing to listen to it later on. It's very appreciated. As Denny mentioned, I'm Evan Norton. I'm the managing partner of SPRIG Equity. I'm joined on the call here today with my wife of 20 years. I think it's important to point out that we've been married for 20 years. And operating partner, that's Katie Arnold, and my investment partners, Rebecca Raby and Jonathan Bateman. I want to share with you the origin story of SPRIG Equity. My wife's consulting firm, SPRIG Consulting, so you'll see the difference between SPRIG Consulting and now our new entity that we've formed, SPRIG Equity, was working with a premier cardiology company called Affera. The CEO of the company, who I had previously invested and backed at Abbott Ventures, had asked me to assist him in selling the company, given my relationships with large medical device manufacturers. Katie and I decided to invest in the company, and we thought to use Katie's commercial expertise and my investment and acquisition experience to help move Affera forward. This past September, we helped to sell Affera to Medtronic for $925 million. We achieved a potential return of over 17 times our initial investment. And we realized something very important, that the combination of our career experiences was stronger together than it was individually. And at that moment, we had filled a market need for the health tech sector by combining our expertise, our innovative mindset, and our disciplined investing. And in that moment, 1 + 1 = 3. So we founded SPRIG Equity, bringing together access to cutting-edge healthcare innovation and decades of successful venture and growth investing, with numerous successful exits. Over the decades we have spent in the health tech industry, we've built an unparalleled pipeline of existing target investment companies. Other investment firms will say that what makes them different is their network. We, however, have powerful networks but we also have the experience to monetize those networks, and that's the important part. We have an even stronger competitive advantage. As Denny alluded to, we have access to a highly proprietary pipeline of over 100 companies that are very, very perfect fits for our investment criteria, which we will discuss shortly. These sources stem from two primary pools. The first is access to a portfolio that I personally built at Abbott Ventures over the 10-year period where I led that organization. And second, it comes from a 15-year-old consulting firm that has worked with over 250 companies. Through our immense experience in guiding companies to successful exits, we also have the ability to screen companies to select those that align with the top priorities of strategic buyers. And this is our validation. Between my investments and Katie's clients, we have sold 57 companies to 27 strategic buyers for an updated value. Denny had mentioned 30 million just in the time between when we were organizing and now. That value has gone from 30 billion to 35 billion. And it's not just selling to one of these companies once. We sold 6 companies to Abbott, 5 companies to Boston Scientific, 4 companies to Medtronic, and so on. And if you're not familiar with the medical device and med tech space, these are the blue chip companies in the market. And these relationships that we have are unique in the healthcare space and something that we continuously nurture. Another point on this slide on the right that you'll see is that the vast majority of exits in this space are in the $100 to $500 million range. This shows that it's required to have a highly differentiated niche strategy, and this is the way to win where we play. We view an ideal fund size in this space of 200 to 250 million. Which is why SPRIG Equity is moving towards an initial close in the process of raising a $100 to $150 million fund driven by the proprietary deal access that we spoke of and the proven track record that we've also alluded to. This means that our target fund size of 100 to 150 million leaves a lot of room for creative and co-investment driven limited partners. Finally, now is an ideal time to invest in the space. Many strategic acquirers have been driven out of the market because of the frothiness and the high valuations and multiples over the past 2 to 3 years. They are all back and looking to deploy capital. I personally have seen it. I've been approached by 3 strategic acquirers to personally help guide their M&A strategy. Katie and Rebecca, who are on the consulting side previously, see it as well. Their clients are starting to receive more inbound interest from strategics. And Jonathan, who brings the macro view from a consulting perspective, having worked for Boston Consulting Group for most of his career, when he interacts with the heads of strategy at his largest clients, they are actively looking for transformative and tuck-in acquisitions. I'm now going to pass the presentation over to my lovely wife and partner, Katie Arnold.
Thank you, Evan. So as you can see here, SPRIG Equity is supported by truly best-in-class advisors built through our trusted industry relationships. We've carefully crafted this group to deepen our expertise and the skill set we offer to our portfolio companies. And we are very proud that every person we have approached to be an advisor for SPRIG Equity has joined us. We have serial medtech entrepreneurs who've had multiple exits in the space. We have public company executives who know how to scale and build high-performing organizations. Leading edge physicians is critical, and they will guide us to show us how to use and invent transformative new devices to improve patient lives and lower costs. And finally, we need unique skill sets. So we have a tech scout in Israel and also are working with one of the industry's leading healthcare recruiters. We invest in areas where we are experts. Devices, what goes into the body as implants and what physicians use to support procedures. Digital health and tech-enabled services, tools that enhance reach and the delivery of care. And diagnostics, what detects disease and guides the course of action. And through our experience, we've noticed these opportunities for success, and we will be investing in solutions that align with 5 main themes: buying growth through M&A, digital, precision medicine, big data AI, and lower acuity care settings. I'll highlight 2 of these now, but we can go further into depth in the others during the Q&A. So buying growth through M&A. As Evan mentioned, new product development is not necessarily a strength of large medical manufacturers. They buy companies and drop them into the existing sales channels. So having a new technology be within the top 1 to 2 areas of highest strategic interest is vital to our strategy. Lower acuity care settings. This team recently made an investment in a surgical robotic platform that's an example of this. The technology enables minimally invasive surgery to be moved from the hospital to the outpatient setting. This improves patient outcomes, saves money, and frees up the hospital space for more complex cases. So Evan, I'll pass it back to you to talk more about our areas of expertise with the fund.
Thanks, Katie. So at SPRIG Equity, we're raising $100 to $150 million fund in order to target our areas of expertise that Katie just alluded to and the themes that support it. And those areas are growth equity. We are commercial experts. We've launched over 70 products. We know how to build a tested commercial plan from scratch once companies have a proven product. This will be 40% of our portfolio. Late stage venture. We've brought nearly 100 products through the regulatory process and are adept at managing this risk. We will support innovation to bring it to the market to drive impact for patients. This will be another 40% of our portfolio. Finally, star entrepreneurs. For a very small number of our deepest relationships, we will back entrepreneurs we have worked with before on multiple successful companies, even earlier in their transformational efforts. This will be a highly selective part of our portfolio and comprise the last 20%. In summary, this is your opportunity to join the SPRIG Equity ecosystem. As we discussed, this started with combining our careers, this marriage between myself and Katie. We are supported by our extensive HealthTech network, which has validated our model with their participation as advisors and investors. This includes former CEOs that we backed, serial entrepreneurs, as well as Abbott and other leading medtech executives. It also includes support from the prior CEO of Abbott, Miles White, who's a reference for our fund. We've leveraged our decade-long experience of being professors at Northwestern Kellogg, and we've been able to build out our dream team, adding Jonathan and Rebecca. Rebecca, who was the best employee that I think Katie and I have both had, both either at Abbott Ventures or at SPRIG Consulting, and Jonathan, who is by far the best student that we've had in our class while we've been teaching at Northwestern, who I then had work with me at Abbott Ventures. And we're very, very proud to be supported by family offices and other high net worth limited partners. Now we are asking you to become part of our ecosystem and to please join our family. Thank you again for your time. I'm now going to turn it back to Denny for our Q&A session.
Thank you. And did you mention, or you want to mention privately later, what's the minimum investment that you're looking for?
Absolutely. Yeah. So the minimum investment is $250,000 for individuals. For institutional groups, it's $1 million.
And the holding period usually in those kind of investments?
Yeah. So the holding period for our investments will be between three to 5 years. It could be earlier in some cases, but the fund the fund life will be 10 years, but we expect to have the return the J curve by year 7.
Great. So before we jump to a couple of questions we have here, I wanted to ask, how did well, it's kind of a probably easy question and well, easy answer. How did COVID affected your world in general? Did you see some sectors under healthcare that made it better than others, or I mean, obviously the importance of the segment became known even more than it was before, and I think these sectors had a huge, tremendous growth due to COVID. What have you seen?
Yeah, so I'll start, and then if anyone else wants to join in, please do. So I think COVID had some negatives and some positives. I think the primary negative of COVID is that it delayed elective procedures. So for all companies that were pursuing opportunities that required elective procedures to be done, those almost all went to zero, and so that sent the financial world and the health tech world into a frenzy. But there were lots of positives that came out of COVID. I think the most pressing positive that came out is that advances in technology were accelerated by decades, and that included everything from telemedicine to making sure that you had connection with devices and with patients. And so the importance of being prepared in case another pandemic like that occurred started to come into the minds of all the executives and the entrepreneurs. So I think what you'll see in our portfolio as we develop it, it's not going to be that we avoid things that would be materially impacted by COVID, because we do think we're on the other side of COVID, and it's important for us to meet the unmet needs of the market and not always be concerned about COVID. But at the same time, those advances are allowing us to look at opportunities in a new way, such as in the connected device market. So anyone else have a perspective on that?
Maybe just one basic thing from a macroeconomic perspective, which is as hospital subsidies dry up over the last couple of years, they were subsidized by many different government actors. The need for truly innovative, margin-changing technology, where you're lowering costs for patients but not changing their revenue profile, is an immensely important trend. And so they're looking for partnerships, and they're looking for new products that help them drive down their own costs, because they're losing a key source of funding as they continue to get squeezed by inflation, by increasing age, et cetera. So maybe just from a macroeconomic position, the med tech industry is extraordinarily well positioned to support hospitals and patients in the transition.
And I would just also add to it too, Denny, that through COVID, the silver linings perhaps are that we found that we as patients are willing to do more of care at home, tests that can be sent to us, diagnostic tests that we can perform in the home, in the comfort of our homes, and then send into a laboratory. Or visits that allow us to do them in lower acuity care settings versus being in the hospital. So I think even as patients, we also are now seeking to have the healthcare system, accept that at-home care. And that was something from a regulatory and reimbursement that was a challenge before COVID. And we are starting to see that those reimbursement and regulatory guidelines are now changed, and innovation is following that as well. And so I think that is a silver lining, and I think the markets are ready for that. And we are seeing more companies with, not only having patients be in an acute setting, but in a lower acuity setting getting care.
Thank you. So you mentioned at the beginning of your presentation a recent successful investment in Affera. Can you provide more information about the relationship, how it impacted your strategy at SPRIG Equity?
Yeah, absolutely. So Denny, thank you for asking. So as we discussed earlier in the talk, we made a tremendous return on Affera, and I think it was due to the following. So SPRIG Consulting has had a relationship with the company, and they had strongly positioned the technology in the market space. I also have a very deep relationship in the space where Affera was operating. I had been involved in that market and had been a part of the key advances as an investor or a board member over the past 15 years. And I think one of the things that it enabled us to do was really to explain to the market leaders, the companies that might be interested in Affera, why this technology was unique and would disrupt the existing competitive dynamics. And all of that allowed us to create interest to drive strong inbound acquisition process from competitors. So the founder of the company, the CEO, I had previously backed at Abbott. And so I had worked with him before. And so when I was leaving my role with Axelmed Partners, he was actually the first person to call me and said, Evan, I really need your help. I'm trying to figure out how to position my company for an exit. And so although they had worked with SPRIG Consulting before, I had them re-engage with SPRIG. And then we ran a process where I went to conferences with them, sat down with the leading executives at all of these companies. And all of that culminated us in selling the company this past September. So really, this was an opportunity that changed our strategy. It really solidified that what we were providing is unique. We could select the best companies. We could aid them in positioning and commercialization and manage them to an exit. And as one of our key advisors told us when we shared this story, you should already be doing this. Why are you waiting? And so that's really what sort of turned the light bulb switch on for us, that we needed to get busy and to take this marriage and create this opportunity going forward.
Thank you. And now you've described two main sources of deal flow, SPRIG Consulting and Abbott Ventures. Are there additional sources for deal flow that you're looking at?
Sure. Yeah, I can take this one. So I think from our collective 70 plus years of working in healthcare and the strong brand we've been able to create in this marketplace, we really do see an extraordinary amount of deal flow from a variety of sources. Two of those we've already described in detail. You mentioned access to clients of SPRIG Consulting and access to Abbott Labs' confidential portfolio, which are obviously very unique and very valuable to this fund. But there are other sources of deal flow that are also of value. So I'm glad you asked. The first one would be Northwestern. I think one of the things that's unique is that we are all Kellogg alum. So you mentioned that in our bios. It's kind of a unique thing across our team. And also, as mentioned, Evan and Katie have been on faculty at Kellogg for the past 10 years, teaching a course that assists HealthTech opportunities. They're also involved in the curriculum for the tech transfer office. So this really gives us unrivaled access to technologies that come out of Northwestern, which are actually increasing in number. So in fact, just this past week, there was a medical device company that spun out of Northwestern that has technology that was developed by former students of Evan and Katie that was acquired for $140 million. So that's one source of deal flow in addition to the two that we described in our presentation. Another one would be our relationship with some of the leading incubators and accelerators in the space. For example, a deal that's currently in our pipeline comes from a Silicon Valley incubator that has an incredible track record. They're also a client of SPRIG Consulting, and Katie sits on their leadership team. So it really gives us preferential access to their portfolio. Another deal source would be deal flow through other venture partners. So through our investing history as a team, we've been a part of 70 plus syndications with leading venture and corporate venture funds. And then the last kind of source of deal flow I would mention would just be our own personal healthcare networks. So we, whether it's serial entrepreneurs we've worked with in the past or physicians that are involved in developing leading technology or society groups or other partners, we truly are seeing deals come through our network every day as they see interesting opportunities that they want us to take a look at. So I think when we think about the buzzword of highly proprietary deal flow that you hear so often in this space, we really mean it and we can back it up. And in fact, I think that's probably our biggest differentiation within the growth late stage venture asset class, and the thing that's going to be most critical to our success.
Thank you. And can you provide us some examples of
Yeah.
Deal pipeline and type of companies you're targeting?
Sure. Yeah. So we, right now, as I mentioned, we are seeing an extraordinary amount of deal flow. We have about 10 to 15 new opportunities come to us every week. Many of those that would be a good fit. We're being very selective at this point. I think after we finish fundraising, we'll open that up a bit more. But as of right now, we have 5 to 7 high priority investment opportunities in our deal pipeline. And I can walk through, a handful of those examples right now at a high level. So the first company would be a digital growth stage company that's redefining the clinical trial space. And I think this is a perfect example of the type of digital investments that we're looking for, because it falls into an area of our expertise. And in this case, that expertise would be around the clinical pathway for regulated medical products. So when you think about traditional clinical trials, one of the main challenges is that they take so long. And a big reason for that is that patients often are lost in follow-up, because it's such a big burden for the patient to return to the site where they received care. And as a result of this, there's actually, if you look at the data, on average, 80% of clinical trials do not finish on time. So that's a huge cost to manufacturers. And in addition, 90% of trials are missing critical clinical data. So this company is trying to solve for this by using both a technology and a human touch approach that allows for reduced costs and time for clinical trials and gets these breakthrough products to patients faster. Specifically, they have a gig economy workforce of healthcare professionals, so physicians, nurse practitioners, phlebotomists, sonographers. There's around 2,500 of those today across 50 states, and that number is growing. And those healthcare professionals are conducting the patient follow-up in their home at the equivalent standard of what's done in the clinical trial setting. So, this company has already been involved in several clinical trials with leading medical device and pharma companies. And what they're showing is a 25% improvement in enrollment and a 90% improvement in missing data and patient retention, which is really huge for this space. They're going to be around $5 million in revenue this year, and they're going to be double-digit revenue going into next year. So our company has a long-standing relationship with the CEO, stemming back from our days at Abbott, and she actually preemptively approached us to be involved and is eager to have us join as investors, given our understanding of the clinical space. So that's the first company in our pipeline. A second company in our pipeline actually comes from the leading incubator that I described earlier. So this incubator, their track record truly is impressive. They've had over 6 exits. They have about a 5x return. And what's really incredible is that the time to exit is less than 3 years, as they're usually selling these companies in that early clinical trial phase prior to regulatory approval. So the company that we're interested in is actually an ultrasound imaging platform that's used for cardiac procedures, such as minimally invasive valve procedures. And these procedures are somewhat limited in number. There's a huge need in terms of the patients who require them, but not as many are performed. And a big reason for that are the challenges with visualization during the procedure for the physician. And this stems from 2 things. So the first is that the current imaging that's used to guide these procedures, it's really poor quality. It's using ultrasound, which you may be aware is, just a black and white image that's often difficult to interpret. So these procedures are very challenging, which makes them performed only at some select centers across the country. The other issue is that a sonographer, or the person, who's controlling the ultrasound, is required for every single one of these procedures. So it really makes scheduling challenging, which again limits the scalability of these procedures. So the company that we're interested in is solving for this because they're using AI and robotics integrated with ultrasound to create realistic 3D real-time images of the entire heart. It truly is an unparalleled guidance for these physicians for these types of procedures. So we're excited about this company. This is another example of where we have preferential access, just given our longstanding relationship with the incubator and the work we've done with them at SPRIG Consulting. So there's two. I'll give you one more. So the last company we mentioned earlier, and I'll just go into a little bit more detail. It's actually a company that we've made an investment in before, which is a surgical robotic company that's moving minimally invasive procedures from the hospital setting to the outpatient setting. And they're very different than surgical robotic companies that you may be aware of, such as Intuitive Surgical out there in the market. Those companies, their robots are extremely expensive. They take a huge footprint in the hospital, and oftentimes they're only used for very long or complex procedures because the time it takes to actually get it set up, turn it on, can be longer than the procedure itself. So this company has a very different approach. They have a console-free, small footprint surgical robot that can be used to address all the procedures that the current surgical robots cannot treat for the reasons I just described. Another really unique thing about their platform is that it integrates magnetic technology, which actually allows the surgeon to make less incisions during the procedure, which results in less pain for the patient and a faster patient recovery. So between having a smaller footprint and a faster patient recovery, they're the first ones that are enabling these procedures to be moved from the hospital to the outpatient setting. So again, another one that we're really excited about. I mentioned our team has made an investment with them. Evan actually sits on the board, which gives us unparalleled access to the company. So I hope that, we've hit a growth company, we've hit a late stage venture company, we've hit an opportunity out of a serial entrepreneur, but I think it gives you an idea of the type of deals we have access to.
And those companies you've invested with this fund that we're discussing today?
Good point of clarification. So prior to starting SPRIG Equity, Evan, Jonathan, and myself created a vehicle called Ballast Capital, which was doing investments through an independent sponsor model with the idea of SPRIG Equity in mind. So this surgical robotic company that I mentioned, that was actually an investment that we made earlier this year through that entity, Ballast Capital.
Yeah, so the first company that you mentioned, the clinical trial company, is under a term sheet with SPRIG Equity. The second company would be an investment through SPRIG Equity. And the third company, the robotics company, is a company I currently sit on the board of. And the company will be raising capital beginning of 2024. And we anticipate that if things continue to progress as we've been observing, that we'll lead that next round of financing with SPRIG Equity.
So just to remind us, the current fund has been around for how long, and how much have you deployed already?
So we're currently in the fundraising process. So so this fund, we've been investing as a team for about a year now, but we're raising this fund. So we're going to have an initial close in Q1 of next year, which I'll talk about. It's one of your final questions. We'll talk about it. But we're basically, the unique part about what we're seeing here is that because we have access to these portfolios, we've been able to map out our investments in such a unique way. So that's, I think, what's having you come up with these questions, is that we already know what we're going to be doing because we have such a unique proprietary deal flow. Right,
and you're already invested in those. You might have follow-up investment with them, with the fund as well. We have several questions. I'm getting them on my phone. I'm getting them here, so I'm trying to jump from one another and look as if I'm in control. So I am in control. So due diligence is my next question, but here it is. Your due diligence process and the resources your team has to support the investment process. Please.
Yeah, that's good, Denny. So I'll try to answer this one quickly so we can get back to some of the meat of the content. But maybe just to be blunt, this isn't SoftBank, so we actually run a thorough and rigorous process before we make any investments. So that was a bit of a joke, sorry. So the four folks here are all in the investment committee. Our deal teams consist of either Rebecca or myself plus Evan. Katie serves as the operating partner and the industry expert to be a sounding board and a challenger in the room. So we have a robust investment committee process that must be unanimous before we make any investment decisions. Now, the way that we actually build our diligence, we've drawn on processes that Evan and Rebecca used at Abbott and Axelmed, and then I use at Riverside Partners as well. So it's a mixture of a venture process and a private equity process. What that means is it consists of financial, market, legal, IP, diligence, as well as a host of conversations with key opinion leaders and market experts in the spaces that these companies are in. And so what we actually draw on are our advisory board first and foremost, because we have some of the as Katie mentioned, leading edge physicians and entrepreneurs who know the spaces that we invest in even better than this group does. Then we have a network of SPRIG consultants who have worked with over 250 of these companies in the past, who have seen many of the different iterations of what the technology is kind of leading up towards. We have additionally unmentioned folks who are not on the pages that we've built deep relationships with over the last 20, 30 years as a group to be able to tap into them to ask questions around IP, legal, et cetera. And then of course we have prior Abbott diligence on many of these companies that we've looked at, because Evan, as the market leader in many of the spaces that we're investing in, Abbott actually has seen many of these companies or many of the types of technologies that we potentially invest in. And so we draw on prior experience and knowledge of these companies as well. And then maybe the last thing I'll just mention is, given our strong relationships with Kellogg, we have access to the business school at Northwestern and some of the most promising minds there to help support the team with some of the diligence legwork. And so while there's four of us here who are the lead team of SPRIG, we actually have a really deep bench that we can draw on for the diligence processes before we make any investment decisions.
And how did you know when you were a student that your professor is going to say that you were the best student and you'll end up working for him? Okay, no, we have too many questions.
Yeah.
I did share that with him partway through the process. I told him not to go too far. So
because my professor told me that it's better if I will pursue different challenges. But okay, so I see questions here from the audience. I'm picking the ones that I feel are more interesting given the limited time we have. So I'll jump into those in a second, but I will choose from the questions we have here before we continue here. Who are your LPs? Can you describe who are your current investors?
yeah, absolutely. So our mix of current investors and LPs is really family offices and high net worth individuals. Many of the high net worth folks are operators in the health tech market that we've worked with in the past. This includes CEOs and serial entrepreneurs that we have past exits with, and Abbott executives, as well as other health tech industry executives. And we really view that constellation of LPs as really validating and supporting what we're creating here. I mentioned earlier that my former CEO was the head of my investment committee. Miles White is a reference for the fund. And I would also highlight that although in name we are a first-time fund, you can see from the interactions and the experience here on the team that our collective 70 years of healthcare investing, consulting, and operating experience combined with our stellar track record is really a rare asset to find, regardless of the Roman numeral after the fund. And I do think it's a very strong reason why we've had such strong interest in our fund from both family offices as well as the individuals that we've interacted with in the past.
I want to jump to another question that is important before we will answer some of the questions I'm getting here. your funds timeline. We talked about that a little bit, and when are you targeting your first close? If you can revisit that.
Yeah, absolutely. So we're targeting our first close in Q1 of next year. It's really being predicated by the first company that we have under a term sheet and the timing of that deal. So we anticipate that that's going to happen. It could happen as early as February and as late as March. And what we're going to do is close on approximately 30 to 40 million. And then use the remaining 12 months to raise the additional funds. We anticipate that we have a number of family offices and even if some institutional investors that have been waiting to get into the 2023 calendar year to reassess their allocation. But we anticipate that the funding will accelerate pretty dramatically after our first close in Q1. So that's the timing.
Now, I'll jump for a second to a couple of questions that we're getting here. In respect, thank you all for the exciting presentation. I'm just wondering what relevance Europe has, if any, for you in respect to deal sourcing or funding investments, etc.
Yeah, I'm gonna let Katie answer that one because Katie, maybe you can talk about both our venture partner as well as the work that SPRIG Consulting does in Europe.
Yeah, absolutely. So we do have, as a part of the team, a gentleman that I have worked with now for nearly 2 decades. And so he is located out of Belgium. He's from Europe, has lived in the States. He is the one partner on the team that did not go to Northwestern. He in fact went to University of Chicago, but we don't hold that against him much. But he has access in Belgium to a tremendous number of he himself is the CEO of a private company. He has served in leadership roles in other medical companies in Europe. And he himself is a part of a strong network in the medical health tech community in the European Union. And so Olivier is really instrumental in our access to deal flow in Europe. And that also has translated into SPRIG Consulting. I would say over the past 3 years, specifically the amount of companies coming out of Belgium, the government there has set up a financing vehicle supporting medical innovation in the country. And so we have seen, as a result of that, a significant amount of companies coming out of the country that SPRIG Consulting has been working with. And also as a part of the deal flow, I know we are evaluating several of those companies. So Europe certainly is always an important part of the ecosystem and will continue to be. So, to answer your question, yes, it will be a part of our deal sourcing, and it will be, we are speaking to also other investors in the European Union, specifically within Olivier's network that will be a part of the fund.
Danny, and for those who are listening, I've been going through some of the questions that were typed in and just answering them. If we have time, I think you will address some of them more directly too in some of the questions. But given we only had 10 minutes left, I wanted to make sure that we answered all the questions that I was seeing.
Thank you, Jonathan.
And Katie, while we're at it, can you tell us more about the consulting side of things?
Absolutely. So I know we hit on it throughout the presentation, but SPRIG Consulting is a leading health tech commercialization and strategy firm. We really work with a wide range of health tech companies. The majority are private health tech companies. I know I saw in the chat, do we have access to not just private companies, but public companies. And in fact, yes, through the SPRIG Consulting, we do work with a fair bit of public companies. I'll have Evan kind of speak to if we'll consider any of those from a investment standpoint, given the market situation. But important to note that when SPRIG partners with our clients, we talked about the 40 plus acquisitions or exits that have happened for our clients. And that engagement with SPRIG Consulting to exit typically ranges between 3 to 4 years. So another key factor as to why Evan and I, when we looked at an opportunity to identify these leading innovative companies in the space, we really are positioned to step in and be a significant part of not only from SPRIG Consulting standpoint, the commercialization strategies, but also from SPRIG Equity standpoint in leading a round of investment or funding. And as you mentioned, Denny, and I am very proud to point out that SPRIG really does work with not just the leading entrepreneurs and teams, but some of the most innovative technologies and products on the market. So I'm really proud of what we've built as a company and the team and what our entrepreneurs have been able to accomplish. We really see ourselves as an extension of our clients' teams. We work with the executive team, we are guiding strategy, and we are helping them reach their next milestone. So that's a little bit more on SPRIG Consulting. To also answer another question we get quite often, I will certainly continue to lead SPRIG Consulting as the CEO and founder. I have a very committed team, and we are very fortunate that we work with some of the best technologies in the market. So I will continue to be nurturing the pipeline of these new innovative clients and continue to build it. With SPRIG Equity, I will be an operating partner, and I'll, as Jonathan mentioned, participate in the investment committee. So I really look forward to continuing the story and the family of SPRIG.
And
I just wanted to make one quick comment, which is relative to public companies. SPRIG Equity will only be investing in private companies across the areas we mentioned: growth equity, late stage venture, and star entrepreneurs. It is possible that some of our companies could enter a process to go through an initial public offering, and in that case, we would support them, but we will not be investing directly in public liquid stock positions.
And I see some people ask, how do we get in touch, and other questions. So we will send the information later, tomorrow, with the recording link, with a link to the recording. Another question from someone here is, what effect, if any, do you see the human factor having in the form of the current nursing challenges? Do you see on your space?
Yeah. So,
I was going to say, Evan, Rebecca could handle this because you touched on it, Rebecca, with our investment in the with the sonographers, and that's a real issue. That staffing issues and resources are a real issue.
Yeah, it's actually an issue for both the surgical robotics company as well as the ultrasound imaging company. So Rebecca, I'll let you take this question.
Yeah, no, I think it's perfect because it definitely speaks to a trend that we're seeing and these companies that are innovating to solve for this. But as we talked about earlier with the cardiac imaging platform, I mean, that truly is a big barrier to these procedures being performed. Is just scheduling and staff shortage. So being able to solve by using robotics that allow for this resource to be removed from the procedure is a big benefit. So I think this is an example of that. We also mentioned the company, the surgical robot that's moving the minimally invasive procedures to the outpatient setting. This is another example of where staff shortages are just truly limiting which procedures can be performed. So I think, you're seeing innovation that is trying to solve for this. And these are just two that are really exciting that have come across our desk.
Maybe I think that the rest of the questions, how is AI a part of any med device an attractive investment target for you? How do you see AI is importance?
Katie, do you want to pick that one?
I can start this one. I'd be happy to. So, we are starting to what we call see smart devices. So no longer are devices just being implanted and then we're, unclear, we think they're working in the body, but we are starting to see that sensors are getting put on devices. And now we're taking a wand and we're holding it over the device, and the wand is speaking to the device, and it's feeding, through a software algorithm, how the device is performing, so that externally we can better assess and be more predictive in the patient's care. And so we've seen a huge impact with patients not maybe needing to come back to the hospital, so we can have the nursing staff call them and change their medications, because they're noticing through some of these smart enhancements to devices, they can better manage patient care. And so that's been a huge benefit. And then also over time, the software and the AI is building algorithms so that we can, better perfect devices and better perfect the patient outcomes. So AI absolutely is becoming a part of the formula in health technology.
Yeah, just to give an example, because I think it's helpful to give an example. We've been working with and evaluating a company that is looking at cardiac arrhythmias, so people that have electrical challenges with their heart. And the way that there's a number of companies in this space, but what they're doing is taking all of the history of people's past EKGs, all of the past procedures that these people have gone through, and aggregating all of this data so that they can better be informed to see what are the most typical trouble spots that physicians could treat or attempt to solve the arrhythmia. So that is purely an aggregation of big data, and then using AI to help to try to predict where those procedures should be done. And that's a clear example of where AI and medical devices and this space will be going in the future.
Great. So we are exactly an hour into the discussion, and it's been very interesting. Of course, anything else that you would like to add?
Yeah. So finally, Denny, we want to thank you. Thank you for creating this opportunity. I was able to attend the event in Chicago, and you guys are execute these.
Oh, you have? Oh.
I attended the event in Chicago, and you guys execute these things masterfully. So congratulations to the network and the opportunity that you've created here. As I alluded to, we are going to be having our first close in Q1 of next year, and we are going to be providing incentives for folks to participate. So there'll be a discount on carry for those folks that participate in the first close. And I think I'd just like to finish this by just saying this whole thing started with I was lucky enough to meet the right girl during business school, and that interestingly enough, both of our careers combined and overlapped over time. And we've been able to sort of both build very successful careers, and lucky enough to have Rebecca and Jonathan join us along this trip and to become part of our family. And I would like to say that anyone here on the call, as I really do mean it, we really want to extend for you to become part of our network. But what that really means is that we'd love to have you be part of the family. So please let us know what next steps might be. Any way you want to reach out or contact us, we're more than have a discussion. And thank you all again very much for your time, and hope you all have a wonderful holidays. So thank you very much again.
Thank you so much for this. And I have a question to somebody who been to Chicago, and I'm always trying the local stuff. What kind of medtech companies treat you after you eat that pizza thing you guys have there in Chicago? Right?
There's a reason
if soup and pizza with Mary. I'm sorry.
It's aesthetics. It's called aesthetics. It's called going to see a plastic surgeon. So. But that's unfortunately, it's in all humor. Just to be candid, I think food is what cigarettes were, 20 to 30 years ago, and a lot of the health conditions that we're dealing with are a function of what we eat. And so that's really we're keeping the operating rooms and the physicians quite busy, and there's a reason there's shortages and supply of workers, and a lot of it has to do with what we're all putting into our mouths. And so just a note as we go into the holidays, enjoy yourself, but not too much. So
It's an interesting point because I would like to ask you that, in Israel we have, well, I live here now, but in Israel we have, stickers on every product that has sugar in it. Okay, warning. It's a red. It's like cigarettes. It says basically, if you want it, take it, but you must be crazy. And then they would put 2 stickers if it has above a certain level. So you want to buy golden grams, and then you see 3 stickers saying you're gonna die, man. So now here, I believe that some groups try to get to pass something similar, but I guess the companies have more power than they had in Israel. And I think in Israel they fought it. Nestle and everybody were fighting that, and somehow they lost. Having said that, hasn't society evolved? I mean, when you go today and you see New York City and all the trends of eating healthy food, that once was just what was between the steak and the plate is now what people actually eat. And you see LA where it's even forbidden to smoke. Rebecca, you know that in some areas in LA, you're not even allowed to smoke in the streets. So my question is that a bubble? Only some cities, LA, New York, that are advanced, have that understanding about food needing to be healthy, and the rest of America is in a dire situation. Haven't we progressed since the 50s with our recognition of health and working out and not eating crap? Pardon my French.
That's a loaded question, Denny. I would say, I think what we've learned about the United States over the past few years is that each area, each individual pretty much is kind of functioning on their own. We are a United States, but yes, you are right. There are definitely regional and geographic trends. And we certainly see that in healthcare too. We certainly see that certain parts of the country are healthier than others. And so it's just, that is a matter of fact.
yeah, and I guess the last part I would say is that I think you are right that there's a greater awareness of healthcare, and I think that's a very, very positive thing. Unfortunately, it's a multifactorial issue where you've got both what you put in your mouth plus genetics, and so if you look at it from a multifactorial perspective, there's always going to be I don't think we're in a bubble of people eating excessively now. I think it'll ebb and flow based on what people eat, and there will always be that basal amount of people that just have poor genetics and will deal with these diseases that the devices that we intend to invest in will treat.
And it's definitely more awareness. I mean, think about it. When you go to McDonald's, you see how much fat you're going to eat, and suddenly they have salad in the menu. And in the 50s and 60s and 70s, it wasn't even. So anyway, it's been a very exciting, interesting discussion. I hope that I will be able to meet you in person as well on our stages. I see the questions keep coming, but you'll be able to discuss that later on with the team. Just to let everybody know, we still have several online sessions for this year. Next year, though, we're starting in January in the UAE. March, we're in Houston and Dallas. Then we got Vancouver, and in beginning of May, Vancouver, Toronto, New York. And then we will be in England and Chicago again in the second half of the year, and Miami. And Calgary, a new destination. LA in May. I like that. So that's going to be fun. Lots coming next year. Of course, Tel Aviv and London. So thank you very much for being with us here. I see the pop-ups from all directions, Q&A, chat. We will send everybody the recording of this session and the contact info at the firm. And happy holidays, everybody.
Happy holidays. Katie, Rebecca, Jonathan, thank you all very much. And Denny, thank you again for the opportunity.
Thank you, everybody.
Thank
Bye-bye.
you. Happy
Bye.
holidays.
Happy holidays.